Gold just rallied to a multi-week high. And here is the honest part nobody wants to admit. Almost nobody saw it coming. Not the analysts who do this for a living. Not the loud voices on the financial channels. Not the traders who were leaning the other way. Gold has climbed back over $4,100, recovering the ground it gave up and then pushing past it. And the people whose entire job is to tell you what happens next were caught looking the wrong direction. So let me talk to you directly, because if you own gold right now, this matters more than the number does. The way you read a move like this, a rally that came out of nowhere, is the single thing that decides whether you keep what you built or get talked out of it at exactly the wrong moment. Most people read it wrong. And reading it wrong is how a saver who did everything right ends up handing his gold back to the very people who were betting against him. By the end of this, you are going to understand something that changes how you watch every price move for the rest of your life. You will understand why the rallies that nobody sees coming are the only ones that actually tell you anything, and why the moves everyone predicts are usually already over before they happen. That is worth more to you than any target because it means you stop getting jerked around by every headline. And there is one signal buried in all of this that separates a rally you should trust from a rally you should ignore. One tell that says whether a move is real or whether it is just the market shaking hands with itself. I am saving that for the last few minutes, because it is the part the financial channels will never, ever put on your screen. It is the whole reason nobody saw this coming. Stay with me and you will have it. Because this exact thing, a market lurching in the direction that nobody was watching, is not new. It has happened before, at a moment that a lot of you watching me right now live through with your own eyes. And that moment is the key to the whole thing. So before we touch a single thing about gold today, let me take you back and introduce you to a man whose story is hiding the lesson inside this rally. Go back with me to the summer of 1990. A man, an ordinary man, a retired plant foreman with a pension and a modest pile of savings, is sitting in his den watching the evening news. And the news is bad. Iraqi tanks have just rolled across the border into Kuwait. Saddam Hussein has invaded a neighbor overnight. The price of oil is jumping, and every anchor on television is using the same word. War. A real one, in the most important oil region on the planet. And this man, who has read a little history and lived through the 70s, does what feels like the smartest, most obvious thing in the world. He calls his broker the next morning and he buys gold. Because everyone knows what gold does when war breaks out in the Middle East. Everyone knows. And at first, he looks like a genius. Gold spikes on the invasion. It jumps hard in those first days as the tanks roll and the headlines scream, and he sits back in his den feeling like the one calm man who saw it coming while everyone else panicked. He protected his family. He got ahead of it. Now here is where I need you to lean in, because this is the part that matters, and it is the part almost nobody remembers. He was right about the war. Completely right. The war came. It was enormous. Months of buildup, 500,000 troops, a bombing campaign the whole world watched live on television, a ground invasion, the works. Every single thing he bet on, the war he was certain about, all of it happened exactly as he feared. And gold went down. Not up, down. Through that entire buildup, through the bombs, through the ground war, gold did not rocket to the moon. It ground lower. It drifted down month after month while the most telegraphed war in modern history played out on his screen. He sat in that same den watching the exact conflict he had predicted unfold in real time, watching his gold sink the whole way through it, and he could not understand it. He had been right about the war and wrong about the gold. How is that even possible? Hold him there, in that den, staring at a screen that makes no sense to him. We are coming back to him, because his confusion is your answer. Now let me show you what actually happened, because it is the same thing that just happened to the people who missed this rally. Here is the thing nobody explains to you. The thing hiding in plain sight on every chart you have ever looked at. The price of gold is not a record of what is happening. It is a bet on what is about to happen. It is a forecast. And a forecast has already swallowed the news before the news arrives. By the time that foreman saw tanks on his television, the market had already spent weeks pricing in a Middle East war. The invasion was not a surprise to the people setting the price. It was the thing they had been positioning for. So when the war finally came, exactly as expected, there was nothing left to price. The move was already in the number. And with the expected news out of the way, gold did the only thing it had room left to do. It went the direction nobody was watching. That is the whole secret. Markets do not move on news. They move on the gap between the news and what everybody already assumed. A war everyone sees coming is priced the day it becomes likely, not the day it escalates. And the move that surprises everyone, the rally nobody saw coming, is almost always the direction that positioning had left uncovered because everyone had already crowded onto the other side. Now come back to right now, to gold rallying to a multi-week high while the experts stood there slack-jawed. Ask yourself the honest question: why did nobody see it coming? And the answer is the same as it was in 1990, because everybody was looking at the priced-in news. Think about what the whole market had been staring at. The Federal Reserve, a hawkish chair in Kevin Warsh, a man openly signaling that prices are still too high, that a rate hike is on the table instead of a cut. And gold pays you no interest. So when the market believes rates are heading higher or even just not lower, the crowd sells the metal that pays nothing, and everybody piles onto the same side of the boat. That is exactly what happened into the shakeout. The hawk got priced. Fully. Completely. Every trader who was going to sell gold because of Warsh had already sold it. And that, right there, is why the rally nobody saw coming was the only move left. When an expectation is that crowded, that fully priced, the surprise cannot come from the thing everyone already believes. The surprise can only come from the other direction. So the moment rate hike fears eased back even a notch, there was no one left to sell, and a whole crowd that suddenly had to buy back what they had bet against. The move that shocked everyone was the only move the positioning had left open. Nobody saw it coming precisely because everybody was certain of the opposite. The certainty was the setup. And I want to stop right here and talk to you directly, because this is the exact spot where a retiree gets hurt, and where the difference between owning something real and owning a paper promise on it becomes the whole ballgame. If you are sitting on $100,000 or more in a retirement account, a 401k, an IRA, anything you spent a working life filling, then a moment like this, a violent shakeout followed by a rally nobody predicted, is precisely when the wrong reaction costs you the most. Because the shakeout is engineered to make you feel like the foreman felt, certain you were wrong, ready to sell. And I do not want you selling the bottom of a move that was already priced. That is why I put together a free retirement protection guide. It walks through, in plain English, how some retirees are moving a portion of their savings into physical gold and silver without triggering taxes or penalties, held inside the tax-advantaged account they already have, metal they actually own, rather than a number on a screen that Wall Street can shake them out of. If you are watching this on your TV, just scan the QR code on your screen. If you are on your phone or your computer, go to jeffreedguide.com. And if you go through it and want to talk it over, there is a free, no-obligation, one-on-one educational session for folks with $100,000 or more in any retirement account. No pressure, nothing to buy, just answers. All right, back to the reveal, because now I have to show you who profits from you not understanding this. Here is the part that should make you a little angry. Why does nobody tell you this? Why, when gold rallies to a multi-week high out of nowhere, does every financial channel scramble to hand you a tidy reason for it after the fact? A headline, a cause. This happened because of that. They will always, always give you a clean story for a move they completely failed to predict the day before. And the reason is simple, and it is not on your side. The financial media does not make money when you sit still and understand. It makes money when you react. Every tick has to mean something. Every move has to be a verdict, because a viewer who believes the daily price is a referendum on his decision is a viewer who trades, who panics, who tunes in tomorrow to find out what it means now. If they told you the truth, that most of what you are watching is just expectations getting priced and unwound, that the move everyone explained with confidence was actually random noise around a trend, you would stop hanging on their every word. So they will never say it. They need you to believe the price is talking to you personally. It is not. But here is the part that actually changes things, and almost nobody gets to it. So let me shift gears and be blunt with you. If the daily move is mostly noise, if the rally nobody saw coming was just positioning snapping back, then what is real? Because something is. Gold did not climb from $35 an ounce back in 1971, when Nixon cut the dollar loose from gold, to where it trades now, near its record highs, on noise. Something under all of it is real, and it is the exact thing the daily headlines are designed to make you miss. Let me draw the line for you clean, because this is the reveal. There are two completely different things happening on that chart at the same time, and Wall Street blends them together on purpose so you cannot tell them apart. The first is the weather, the Fed, the dollar, rate hike fears, the daily sentiment, the paper traders shoving the price around in seconds. That is what moved gold down into the shakeout and back up to a multi-week high. Weather, loud, violent, and ultimately meaningless to where this ends up. It is fully priced, and it unwinds constantly. And if you trade it, you will get whipsawed until you give up. And underneath the weather is the climate, the trend. And the trend is not set by the Federal. It is set by things that do not care what Warsh does this quarter. Central banks buying gold at a record pace, and net buyers for years running, quietly building a floor under the entire market. China on a multi-year gold buying streak. The long arc of a national debt closing in on $40 trillion that has to be financed somehow. That is the climate. It is slow, it is boring, it never makes a good headline, and it is the only thing that actually decides where gold is in 5 years. The weather is what everybody watches. The climate is what actually matters. And they will never help you tell them apart, because the climate does not need their daily narration and the weather does. So the honest answer to why nobody saw this rally coming is this. Everybody was trading the weather. They were staring at the Fed, at the fully priced hawk, at the crowded bet, and they got surprised by the exact thing a crowded bet always gets surprised by, a snap in the other direction. Meanwhile, the climate, the central banks and the debt and the record high backdrop never even flinched. It was buying the whole way down, and it is still buying now. The people who saw the shakeout as a chance instead of a verdict were reading the climate. The people who got shaken out were drowning in the weather. And I have to be honest with you here, all the way honest, because you will hear the opposite everywhere else. I cannot promise you a price, and I cannot promise you a date, and the second anyone does either one, you should close their video and never come back. Gold is calmer than silver, but nothing in this world moves in a straight line. This rally to a multi-week high could give it all back. Gold could roll over and revisit the lows it just bounced off of before any of the bigger story plays out. Being right about the direction and being early to it feel exactly the same while you are holding through the drawdown, and only one of them ever pays. The climate is real, but in the short run the weather can soak you for a long, long time, and a few good days off the lows is not a confirmation of anything. This is a case for why the setup deserves your attention, not a guarantee it pays off on your timeline, and it is not personal investment advice. Own only what you own, and size it so a further drop can never force your hand. Which brings me back to that foreman in his den in 1990, and to the signal I promised you at the very top, the one that tells a real move from noise. Remember his confusion. He was right about the war, and gold still fell. Here is what he understood years later, and it is the signal. The move that matters is never the one everybody sees coming. His war was priced before the first bond dropped. The thing that would have actually moved gold, the unpriced thing, was something nobody was talking about. And when you learn to ignore the loud, expected, fully priced news and instead ask one question, is this move happening on something everybody already knew or on something genuinely new? You can finally read a chart honestly. A rally on expected news is noise, already priced. Ignore it. A move on the unpriced, structural thing, the central banks quietly buying, the physical metal getting pulled off the market, the debt that will not stop growing. That is the climate talking, and that is the only move worth trusting. The rally nobody saw coming was the market pricing out a fear that had gotten too crowded. It was weather. Loud weather. But the reason it could rally at all, the floor it bounced off of, that was the climate. That was real. So here is what to actually do with all this. And it is not advice. It is just how a calm person thinks about their own position. First, stop reading the daily move as a verdict on you. It is not talking to you. It is expectations getting priced and unwound, and it will try to shake you out at the worst possible moment, exactly the way it nearly shook out that foreman who was right the whole time. Second, own the metal, not the promise. The whole difference between the people who survived every one of these shakeouts and the people who got wiped out was whether they owned the real thing or a leveraged paper claim on it that someone else could yank away in the middle of the storm. And third, never sell into the shakeout and never chase the rally. The shakeout is the machine that transfers metal from the people who react to the people who own. Do not be the fuel, and do not buy the top of a snapback that was just positioning unwinding. Size your position so a drop cannot force you to sell, and then let the weather do whatever it wants. If you are on your TV, the QR code is on your screen one more time. If you are on your phone or your computer, go to jeffreedguide.com. It costs you nothing to be informed, and the honest reason to look now is not fake urgency. It is the plain fact that the time to think a decision like this through calmly is exactly when nothing feels urgent, which is right now, in the quiet after a rally, not the day everyone is panicking into the next shakeout. And for those of you who stayed with me all the way to the end, here is something just for you. If you have $100,000 or more in any retirement account and you mention that you watched this full video, you can claim a free, one-on-one, no-obligation educational web conference. A real conversation about what you actually own versus what you think you own. No pressure and nothing to buy. That is for the folks at that level who made it all the way here, and you are one of them. So, could this video sit under some other title? No. You came to find out about a 2-week high that nobody saw coming, and now you know exactly why nobody saw it. It was invisible because everybody was staring at the priced-in fear, the crowded bet on the hawk, and the surprise could only come from the one direction the crowd had left uncovered. Nobody saw it coming because everybody was certain of the opposite, and certainty that crowded is the setup for the snap. That is not luck, and it is not magic. It is the same machine that ground that foreman down while he sat there right about his war. The move you can predict is already in the price. The move that matters is the one nobody is watching. And that foreman in his den, staring at a screen that made no sense, he did not sell. Not because he was brave, he told his grandkids years later, but because he was too stubborn to sell at the bottom. And stubborn turned out to be enough. He held that gold long past the war that confused him, and he lived to watch the climate reassert itself when the weather finally cleared. The next rally you do not see coming, and there will be one, is not a verdict on whether you were right. It is just the crowd getting surprised by the direction it forgot to watch. Do not just be right about where this is going. Set your life up so you are still standing, still holding, on the day the market finally stops shaking hands with itself, and the thing that was always real underneath walks straight through the front door.